Hi friends, welcome back to FinveStocks. Today we are going to cover one more topic on technical analysis. Today it's the 11th episode wherein we are going to cover one more multiple candlestick pattern, that is morning star as well as evening star pattern. In our last video, we saw what is Harami pattern. There we covered bullish Harami as well as bearish Harami pattern. Before that, we covered bullish engulfing, bearish engulfing, etc. So before going into morning star and evening star, we will just cover what is multiple candlestick pattern. Whenever a pattern forms with more than one candlestick, it is called multiple candlestick pattern. For example, we already covered bearish engulfing pattern wherein the first candle is a bearish candle and it is completely engulfed by a bullish candle. So it is called a bullish engulfing pattern. The second example is bullish Harami pattern, wherein on the bottom of the downtrend, after forming a red candle, one small green candle is formed, which resembles a pregnant woman. So this pattern is formed because of more than one candlestick. So these are the example of multiple candlestick pattern. So today we are going to cover about two more patterns, that is most important patterns. First one is the morning star pattern, which is a bullish pattern which happens at the bottom of downtrend, and the other one is evening star pattern, which is a bearish pattern which forms at the top of a uptrend. Before going into multiple candlestick pattern, we will just see what is gaps.
So gap up opening and gap down opening, commonly called gaps, which is a common phenomenon in stock market. So let's find out in this chart what are called gaps. So here in this chart you can see several number of gaps formed. This is gap number 1. This is another gap formed. Here one gap is there. So these are all called gaps. Gaps is the difference in price between the body of two candles. Here if you can see, the body of candle ends here. Here it starts from here. So this area is called gaps. Now let's see how the gaps are being formed. The main reason of creating gap is maybe some good news flow comes after the closing of the candle. Assume the company X is having closing price of 100 rupees. After the market hours, there is some news flow happened for the company, which is positive. For example, let's say the company result has been announced after market hours and the result is very positive. So the investors are ready to buy in the stock at any given price on the next day. So at next day, due to this bullish sentiment, the market will open at say 110 rupees. So it is called gap up opening. Similarly, this is a typical chart of gap down opening. Here you can see a gap down opening. In this case, let's assume the company X closed at a price of 100 rupees. After closing, there is some news flow which is negative. Let's assume the quarterly results came negative and there is a bearish sentiment across the company. So next day morning, people who are holding the stock are ready to sell it and come out of the stock. So there will be a panic selling happening and the next day the price will open at say 90 rupees. So there is a gap of 10 rupees, that is called gap down opening. This is mainly due to the bad sentiment on the stock or news which flows in after the closure of previous day. So let's discuss about Morningstar candle pattern. The figure shows a typical Morningstar pattern wherein the first candle is a bearish candle, the second one is doji or a spinning top, and the third one is a bullish candle. So this pattern shows a trend reversal. Normally this is a bullish pattern and it occurs at the bottom of the downtrend. Once this pattern happened at the bottom of downtrend, it will reverse and the market will go up. This is the assumption of Morningstar pattern. Hence it is called a bullish pattern. Let's see Morningstar pattern in detail. Here you can see it's a typical Morningstar pattern in a live chart. So here the market is going into a downtrend. So it is creating continuous bearish candle. So on the last candle, the market sentiment is so negative that it forms a long bearish candle. This one we will term as P1. Once the candle is formed, the next day the trend is negative and it aligning to the trend, it opened a gap down. So this is a gap down moving up and down throughout the day. And finally it closed at nearby the opening price. So it forms a doji. Even though market sentiment is so negative, the candle forms an indecisive candle, that is doji or spinning top. It couldn't withstand the trend of bearishness and it had given a panic to the bears or a frustration to the bears, showing that indecisiveness in the market. The next day, again there will be a gap opening. In this time, this is gap up opening. So it will shaken the bears and it has given a gap up opening. And the market starts to moving up and it managed to close the candle above the P1 candle. So this candle we will term as P3. So the combination of these three candle forms a morning star. So typically the morning star is like the first candle is a red candle which is following the downtrend. Again, next one is a gap down opening. After that, the market goes down, establishing the bearish trend. Then it goes up and finally doesn't happen anything great and it closes at the same range. So it forms a doji. You can say it creates a frustration for the bears as it opened with a gap down, still it couldn't sustain the trend. The next day it opens at gap up, which shaken the bears and given the uptrend on this candle, and it managed to close above the opening of P1. So this pattern forms a morning star. Once the bullish candle is formed, the trend will reverse and it will give continuous bullish candles for a beautiful uptrend. So those who are risk averse as well as risk takers can start taking a trade at this point of view, that is at the close of P3. Suppose at day 3 near to 3:30, if the candle managed to close above the P1, you can start taking a trade for a continuous uptrend. Similarly, this pattern shows a typical evening star pattern. The evening star pattern is a bearish candlestick pattern and it happens at the top of uptrend. So first, continuing that trend, it will show a green candle. After that, the next candle P2 will be a gap up candle and it will close as a doji or spinning top. And again, the next candle will be a gap down, which will reverse the trend and give a bearish candle. So the main characteristics of evening star is it is having first long candle body and the second candle will be short body with a gap. And the third candle again will be a gap down opening and the body closes into the body of first candle. Let's see the evening star in a live chart. So as the trend was positive and it was into a bullish trend, the market made a new high. After that, the first candle is continuing the bullish trend, that is P1. The second candle forms a gap up which is following the continuation of the trend and it didn't do anything better in that day. Managed to open in a gap up, but it goes up and come back and close nearby. So it forms a doji. After a long uptrend, this indecisive candle shows a frustration to the bulls and the next candle opened with a gap down, that is the P3 candle. So it creates panic to the bulls and started creating a red candle. Thus the trend got reversed and it continuously start forming the bearish candles. So it will be a trend on the downward. So a typical evening star is like the first on the uptrend, a typical bullish candle will form and the next candle will be a gap up, but throughout the day there will not be much action and it will close as a doji, and the next day it will be a gap down creating a frustration to the bulls and it will form a red candle. If this pattern happens, this is called evening star and it will further activate the bearish candles and it will be a start of a downtrend. Let's see some of the live examples of morning star as well as evening star. So let's start with morning star. We will search for morning star pattern in some good stocks like say Reliance. So this is Reliance chart on a daily candle basis. So we will search for some morning star pattern or evening star pattern in this chart. So here you can see one morning star pattern over here. So this forms the downtrend and continuing the trend there is a P1 candle which is long red candle, then forms a gap down and after the gap down it gives hope to the bears coming down, then it goes up and in throughout the day nothing much action happened and it closed nearby to the opening point. So it forms a doji that forms indecisiveness in the market. So that will create frustration to the bears as it started opening gap down, still it couldn't able to give a bearish candle. The next day P3 candle forms a gap up and it forms a bullish candle and throughout the day it goes up and here it shows a bullish candle. So it is the start of the trend reversal and after that for next 3 days it was a continuous up move. So here we can capture a good uptrend using morning star pattern. So this is one example. So these are the examples that we can spot it out immediately in Reliance chart. Similarly, we will see some other charts, say automotive, say Hero Honda, Hero Motor Corp. Here we will try to find out some morning star as we saw morning star. So we can look for something evening star or some evening star pattern. So here if you can see This is a typical evening star pattern wherein on the uptrend a bullish candle forms, then forms the gap up, then next candle is gap down and it follows the trend. So here you can say it is a evening star pattern. So some more evening pattern. Here also we can see a evening pattern, but the third candle is not a big candle. So maybe we can neglect. Yeah, here if you see it's a typical evening star pattern. Not one, two evening star patterns are formed here. The first one is here and the second one is here. So after an uptrend, it forms a doji after creating a gap up. Then the next candle is gap down and forms a bearish candle and the trend continues. Again, it's a bullish candle, doji, bearish candle and the trend continues. So these are some of the live examples where you can see morning star as well as evening star. If you are new to this channel, do consider subscribing this channel. And don't forget to like, comment and share if you like the video. Now we are almost covered all the main candlestick patterns. We covered what is a candlestick, how a candlestick operates, how does it work, what is a single stick candlestick pattern, what is multiple candlestick pattern, what are bullish candlestick patterns, what are bearish candlestick, all these things we covered. So now we will move on to the next area in technical analysis. The next one is an important topic, that is where to buy and where to sell, the support and resistance. What is a support line, what is a resistance line, and how to mark support and resistance in a live chart. All these things we will see in our upcoming videos.
Please do like if you like the video and don't forget to subscribe to get the notifications of upcoming videos on personal finance and stock market. Please post your valuable comments. Do follow the Friday basics to make your stock market journey easy.
Thanks for watching and have a good day.